the Devil's Stockbroker, and we've got some exciting stuff to cover for the trading session here in the afternoon going into close. Just a heads up before we go on any further in the stream, I just want to remind everybody that I'm not a financial advisor and none of this is financial advice, so please don't take what I say as gospel, and just remind yourself that this is purely for educational and entertainment purposes only. We'll give everybody a few minutes to filter in here. Welcome, 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 everybody. How's it going? All right. Thanks, guys.
Were you wanting to share your screen?
Oh, yeah. Sorry. Yeah, reminder to the mods, if I'm screwing something up, please let me know immediately. Don't try to wait for a moment to like slide in between when I'm speaking, because I'm like working on never stopping speaking. So you won't be able to shut up. You just have to like I won't be upset, I promise. Just go ahead and just like booty bump me out of the way and say like, "Hey demon, you messed up."
Gotcha.
Cool. Right on.
Comments disabled deliberately.
Come again?
Our comments disabled deliberately.
Our comments disabled comments on YouTube? It shouldn't be.
Yeah, I see comments coming through.
Comments.
Huh. Okay. Let me make sure that I don't have any sensitive windows or anything up. That's good. I'm pretty sure. Oh, I have my bank up. That's pretty sensitive.
Yeah, we don't want that.
It was on another monitor. It's fine. Nobody's seeing anything. Okay. Oh, I'm still showing my Twitter on YouTube stream. That's my bad. Man, I'm just. Where's my trading view? Trading view. Okay, there we go. Okay. Now we're showing everything. Cool. All right. Speak up, please. Okay, I must be coming in a little bit quiet. Let me see if that
You
works.
actually sound pretty good.
I probably sound good on Discord, but I don't sound good on YouTube because of OBS. The OBS settings are so hokey, man. They just get screwed up so easily. All right, let's see if that works out better. Everybody in YouTube, let me know if you can hear me. Give me a thumbs up if I'm coming in loud and clear, especially you folks listening in on a TV. I know the TVs always mess up the audio for everyone.
I mean, it's not only that. You got that soothing voice too, though.
All right, fantastic. Okay,
I got you on the TV in my office. You sound a lot better.
Beautiful. Okay, fantastic. All right. Thanks, everybody, coming in the stream, especially all you professionals, veterans, and traders here in the Discord. If you're listening on the YouTube stream, if you would, go ahead and hit that like button just so that we get YouTube to appreciate what we're doing here for the entire world. and let them know that we've got some good things to share with everybody. The first thing that I want to talk about is this bullshit right here. So this is Sensionics, and if you know, Sensionics is like, this was my play. This was my play. I loved Sensionics from the beginning, and I'm just going to tell you a little bit about their product. Sensionics is they're a biotech firm that focuses on diabetics treatment and technology. Specifically, what they were creating was a product that would replace current continuous glucose monitors. Well, let's see. I'm getting people telling me that the sound's cutting in and out.
I think it may be YouTube because it does look like it was lagging a little bit.
I was just going to say, I'm getting buffering on the TV, and then I pull it up on my phone, and it's kind of choppy.
I know what it is. It's this bullshit. I've got my Ubuntu workstation up here. Let me go ahead and close some shit. I've got a ton of stuff just running in the background right now.
It's all good, brother. Waiting on you.
Yeah. So is everybody else. Yeah, audio's still cutting in and out for everyone on YouTube.
Yeah, I got some people watching too, and they're saying the audio's cutting in and out. So, and it does look like it's getting a little lag on the video.
All right. Give me 2 seconds. I'm gonna stop the Discord stream for a second. Give my computer a second to breathe. I need to set up a proper stream station with my desktop. I've been using my laptop, which, don't get me wrong, it's a good laptop. It's pretty beefy, but
If you need to do like a mass exodus of sensitive applications, you can just like hide your screen share from YouTube as well instead of ending it in OBS.
yeah. Well, I've only got TradingView up in OBS. I've got specific window switching because I never, ever, ever, ever want to show anything other than like absolutely what I want to be seen. We should be okay though, because all I've got on my browsers is like Twitter and Reddit. So okay, YouTube, what the hell are you doing? Really pissing me off, man. Yeah, my CPU is completely maxed out. I apologize, everybody who's watching on YouTube at the moment. My computer has decided that it just wants to cease life and just quit.
Come on, AMC. Pop your intraday high today. Ooh, AMC looking spicy. Let's go. You gonna pop it? Jimmy, you gonna pop that intraday? Give me the money.
Okay.
Getting a lot better now. Better now. Yeah. Okay.
Okay. It is getting there. It is getting there. I had to murder a lot of browser tabs.
Ooh, AMC popped its intraday.
Okay. I think we've got it.
We can get a lot of thumbs up in the chat to let us know that everything's good on your end. I would really appreciate that.
Okay. Thank you guys. Really appreciate it. Thank you for your patience. I think we've got it into a better spot now, so everything should be cleared up at this point. I went ahead and murdered Firefox. Okay. All right, Discord, you should see the eclipse. Right on, right on, right on. Oh, don't tell me someone's going to be bitching at me at work now. Okay, thanks. It was just a calendar invite for a meeting I don't have to be in. Okay. Everything's right with the world. It's going to be okay. Let's get started.
We got a couple of thumbs up in the chat. I think everything's good to go, brother.
All right. Appreciate that. Okay, now we can start the real stream. So, Kat, everything that happened between my intro and now, just it's deleted. We'll just start it over. Hey, everybody. This is True Demon, the Devil Stockbroker. Thanks for joining us today. We're doing a little bit of a afternoon trading session update on what's going on. Currently, we've got a lot of things happening simultaneously in the market. At the moment, the SPY is, well, honestly, not doing all that great. It's showing a bit of a bull pennant right now, but that's on its 2-hour chart here. If you can see that in the corner, it looks a bit like a double top. Which, if you recognize this pattern, this is actually quite a bearish pattern. It's very possible that we might be seeing some downside in the SPY, especially given the Fed meeting that's scheduled to happen next week on Monday. There's expectations that rate hikes are going to be announced, and we're probably going to see some downside in the market. As an aside, son of a YouTube.
Yeah, it does look like we have a couple of people saying it's coming out.
If I get the stream key, can I take over?
Yeah, I'll give you the stream key.
Without ending it?
I think you can, yeah. I think you can take over the stream. I'll keep the recording going on my end. Wow, it's so delayed. Like it's a full minute and a half behind. Okay. Okay, fantastic. We should be getting near real time. I don't know how I don't know how good your internet is, man, but if you have the ability to do ultra low latency, then people maybe they'll appreciate that. I don't know.
Can anyone
Okay,
out
but
on
now
YouTube chat let us know if we're back live and you can hear us okay and all that good stuff?
I'm going to have to share one window at a time with the stream. Screen's being recorded. Okay, so you should just see TradingView now.
Yep.
Okay.
I'm good on Discord side. All right. Cool.
All right. Very good. All right. Thank you, Kat, for taking over the stream. I really appreciate that. I was trying not to do that, but I don't know how else we're going to get this to work. OBS has just decided that it wants to slaughter my resources.
All good, man. No worries.
Third time's the charm. Hey, everybody. This is True Demon, the Devil Stockbroker. And I just totally botched my intro, but we're going to go ahead anyway. We're talking we're talking about latest market action. I've already spoken about this a little bit, but this market is currently not doing very well. We've got this double top pattern here on the SPY after we came back up from lows of 427. So currently we're touching the bottom of this double top pattern, and if we cross below this 445, it's possible that we may return back to previous lows at it's 428 or below. The reason for this is we suspect that rate hikes will be announced at the Fed meeting that's scheduled to happen on Monday, which is Valentine's Day. Just a friendly reminder for you gentlemen, make sure that you do something special for your ladies. And ladies, well, expect something nice. So now the real thing that I want to talk about first that has me royally pissed is this bullshit right here. So This is Sensionics chart, which, if y'all know, Sensionics was my main play that I've been in this since God, is March. I would say March of 2021, right after this big sell off here. I got into Sensionics because they're a biotech company that's developing a very special product focused on the treatment of diabetics. Um, what they're developing is a continuous glucose monitor. That's a device which reads the glucose levels in the blood, and it focuses on monitoring that and alerting to your smartphone. Now, what's unique about their device is, unlike their competitors, which use transdermal, that means through the skin, um, needles to read blood glucose levels, Sensionics has basically a chip that's about the size of a grain of rice that gets inserted in the bicep with just a small incision. It's not even a surgical procedure. It's just a outpatient operation. You literally just have a small incision in the arm, put in the little device, and then close it up with some Steri-strips, and you're good to go for 90 days. Sensionics had an announcement for their FDA approval of their latest product, which now lasts 180 days. And at the same time, they also announced that although it was an unaudited figure, that they had beat their revenue targets with more than $14 million in revenue, and they were issuing guidance on how they plan to use that money going into 2022. And the stock has sold off 34% at the low. You saw how it was moving well ahead of the market way before this news. Somebody knew that Sensionics was going, right? Plenty of people knew. And then all of a sudden, the morning that it is announced, it just dies in a fire pre-market before anyone has a chance to get out of their positions. And of course, this volume spike rivals that of the squeeze that occurred back in what was this Christmas Eve of 2020. The volume spikes are pretty dang close. What this is telling us is that, well, somebody not only knows, but they also decided to pull the rug out on retail. And I've been focusing on this play for quite a while, particularly because I strongly feel that Sensionics is a fantastic company. What they've built, what they've created, the technology that they have opens up so many doors for not only people with type 1 diabetes to be able to live a more I would I hesitate to say normal life, but a more active life, because type 1 diabetes does so much to restrict your diet, your lifestyle, any activities that you would want to do as anyone. If you want to go mountain climbing as a type 1 diabetic, that's a dream you'll probably never get to experience, because you can never be too far from your insulin, and you can never be too far from a hospital, and you can't sustain any kind of physical injury that would leave you with too many bruises, or you may be risking losing a limb. All of these factors that affect type 1 diabetics, it makes it so difficult for them to live a normal active lifestyle. With Sensionics continuous glucose monitor, that changes, at least to the degree that somebody is always able to constantly be monitoring their glucose levels. And the best part is that their device is only $100. That's it. It's only $100. Compare that with, and that's a product that was lasting 90 days. Now the new product is still about the same price and lasts for half a year. Dexcom, their nearest competitor, which has the G6 transdermal glucose monitor, is a needle that can only be inserted in the skin for 14 days maximum, but most of them don't even get to the first week. And 1 month's supply, according to that 14-day maximum, is $500. That's $500 for each of those continuous glucose monitor transdermal needles. It's a ridiculous price. And I'll just go ahead and compare Sensionics to their competitor in terms of their stock price. Wrong comparison. Dexcom. Let's just go ahead and take this out to the we'll go out to the monthly. Sensionics has always been trading sub $5. This is where Dexcom started. This is Dexcom. Back down here on the 1st of March, they were trading at $60. Dexcom at their all-time high was trading at $623.21, and they're currently trading at $422. And it's not a coincidence that since Sensionics started to perform really well, I think that Dexcom has felt some pressure from their partners. Just look at this chart for a minute and keep in mind, respect the price scale. Respect the price scale. Sensionics, from the time that it IPO'd until now, is basically net neutral. Dexcom, from the time that Sensionics IPO'd until now, is a 526.95% gain with a total price increase of $351.60 a share. And Sensionics has a product that lasts more than 7 times as long. That's more accurate. That's more durable, and is able to read more than just blood glucose levels. Sensionics can actually read nutritional levels in the blood. It can read how much cholesterol you have, what your platelet count is. It's ridiculous how good their product is by comparison. And Sensionics has been overdue on literally every single FDA approval that they have ever applied for in the market since they IPO'd. Every single FDA application has been delayed. The last one was due in December 2 years ago. It was December of 2020 was when Sensionics' 180-day product was due. So now we finally get their IPO. They were trading all the way up at $3.80, and now it's come crashing down as soon as the news actually hits. The news that we've been waiting for. Guess what? It's fucking here. The news is here. It hit. And the price is cratered. How does that make any kind of sense? This is the biggest bullshit rug pull that I have seen in the market yet. Sensionics is a fantastic company. There's no reason that it should be trading 30% down since getting FDA approval on the most innovative continuous glucose monitor technology that has ever been produced to date. There is no other product on the market like this, and this is fucking bullshit. This is absolute bullshit. There is no logical reason. This is a complete fallacy of the financial markets. This makes no goddamn sense. There is no reason that this company should be trading at 30% down the day they announce FDA approval for their best product yet. It's going to change millions of people's lives. And I think Dexcom knows it. I think Eli Lilly knows it. I know that those fucks at Novo Nordisk know it. All of those major biopharma companies that have been monopolizing the entire insulin and diabetics treatment industry for the last 2 decades know that Sensionics can completely uproot their entire incumbency on the market. I don't know who holds these positions, and thanks to how little data is actually reported on these shorts, there's no way to know. There's no way to know who's actually facilitating these positions and taking these massive shorts against Sensionics. But I can tell you that their short positions have increased. I can tell you that they got slammed at critical moments, especially right now. I can tell you that a whole bunch of calls were bought on Sensionics way back here, back in late January, and that there were signals produced here showing that short exempts and a bunch of options trading started trading ahead of this, knowing that the stock was going to pump. So somebody knew at the FDA, somebody knew the FDA was going to issue approval more than a month in advance. They knew it, and they wrote it all the way up. And then they took out a bunch of fucking puts, thousands of puts, more than 3,000 puts in the first week of February against Sensionics. And then they took out a massive short position and they pulled the goddamn rug. And they did it here at exactly this moment. There is somebody out there that doesn't want Sensionics to succeed. And who the hell does it affect except the people who make the most money in this fucking market? Let's look at the Ortex data. Excuse me, we were taking a look at Walt Disney for a Kramer inverse play. By the way, Kramer said buy Disney, so guess what? You should probably not. Not financial advice, but Jim Cramer's a fucking idiot. Or he's a fraud. That's just my opinion. Sorry, I gotta breathe some oxygen before I have an aneurysm. So here's the exchange reported SI. Looking for the estimated short interest. Whoa. Okay. So estimated short interest with a look at this security lending volume. Look at this. Look at this bullshit. This Monday. 42 million shares in lending volume. 1 week. 1 trading week. Not even 1 trading week. 4 days. 4 days before they stuff the price. They take all these borrows. Look at all of this. And the utilization went up to 100% as well. Utilization goes from 96 to 100% in a single day with all of this freaking volume. God, just so infuriating. And you know they traded around this information. Let me go see if I can produce some options information for you, because we'll go look at the options history, because that's something that we can look at now. Thanks to the bot that we have here at Hell's Trading Floor, we're able to look at the historical options data. Let's go see if it's live. It's in alpha, so it goes in and out pretty regularly. But let's just look at Sensionics. And we'll go see if I can pull it up. Okay, historic options. We're going to look at SENS. We are going to analyze the Greeks. And we are going to set our expiration starting at 2022 dash February. We'll go to March. We'll go to March 18th. Sorry, you guys can't see what's going on my screen. I will show you the picture once we get there. We're gonna do a little bit of fancy analysis on this, but please be patient while our bot runs and crunches some numbers. It takes about 10 minutes on average to get the data back. So in the meanwhile, we'll go ahead and analyze some of this option or some of the short data. So let's look at the average age and the number of loans. The utilization, we'll take that away, and we'll take away the short interest and lending volume for just a minute. Sorry, I'm screwing up my own chart. Okay. So I want you to very carefully look at this. The number of loans on Sensionics was 334 back here when the average price was trading at $2, and then it started getting ridiculous. The loans that have been taken out against Sensionics have continuously risen, just nonstop. There's somebody that's been betting against this stock since before May of 2021. It honestly goes even back way further than that. The original number of loans that spiked on it was, well, let's go ahead and we'll bring back utilization just for this. Utilization on Sensionics dating back to March during the COVID pandemic was above 90%. There was somebody that was betting on Sensionics getting absolutely smashed in the COVID crisis. And you know what? Somebody knew that COVID was happening too. There was a lot of people that absolutely knew that COVID was going to be announced. That was also documented. And we can make all the assumptions that we want. We can speculate all we want and throw out conspiracy theories, but it's just a fact that Nancy Pelosi and many members of the Senate and the House of Representatives in the United States took short bets on the market, knowing that COVID was going to be announced, and many of them pulled their long positions on stocks that they had been in for years before the COVID crash happened, and they did that as early as February 15th. So, and it's not a coincidence that former President Donald Trump had been talking heavily about different pharma plays. I remember that he spoke in the Rose Garden and mentioned very specific tickers such as CVS Pharmacy and partnerships with Pfizer. He mentioned those stocks specifically, and then the market closed, and after the market closed, literally 5 minutes after the market closed, he said, by the way, COVID pandemic is a real thing. And then all the stocks crashed in post-market. It gave everybody a chance to get out of their positions at a high price, and then all of a sudden the rug pull. And then we went into the COVID pandemic. It was that was finally what made me lose my mind after all of what had happened, and I started paying real close attention to the stock market. And of course, then y'all know the story about GME back in 2021. But anyway, Sensionics, the amount of loans was at their highest right as the pandemic hit its worst point, and then most of those shorts got out of their positions. And then it was only once they started talking about, once Sensionics talked about their FDA application for their 180-day product, which was announced in November. They were expected to get approval at some point in December, but it never came. And the FDA kept citing delays, saying we can't. We're too busy with COVID, over and over and over again. The whole time, all these loans, this gray line that you see here, rising and rising and rising. The average days on loan rising and rising and rising. And of course, the utilization spiking at just to ridiculous levels, just moments before Sensionics made its big move in June. So there have been shorts that have been holding on to their positions since Sensionics was trading sub $2, and they're hurting. They've been hurting. And it's not a coincidence that the loans continue to increase the entire time. Somebody really, really hates Sensionics that does not want to see this company succeed. That is, I firmly believe that. All right. I'm going to go ahead and... I messed up my bot query. I guess I need to pay closer attention. Sorry, everybody. I'm going to go ahead and reset this and get this going again.
Yeah, take a quick peek at the SPY.
All right, let's take a look at the SPY. All right. SPY. I gotta switch something out here. Whoa. I got a lot of charts up. Way too many charts up. Oh, jeez. Oh, you are sick, aren't you? Poor baby. I'm so sorry, SPY. Do you have a fever? What's on the SPY? I'm sorry. Like, the market is sick. The market is sick, everybody. It's not doing well. Okay. So I'm going to do... Okay, I'm getting an analysis going on the options chain for Sensionics, and we're going to see what it shows. Beautiful. So this is going to be a little difficult for people to see, but I really want people to look at this chart. So this is a special gift from our Scourge bot, which is an analytics tool built by Flabbergank, unofficially the head developer at Hell's Trading Floor. We affectionately refer to him as Booger. So Booger created this this tool, which is able to analyze the options data thanks to a access to a new options API, and we see some very phenomenally interesting things. So if you look at the call chain on if you look at the call chain on Sensionics, you'll notice that the theta on these calls just a couple days ago went basically to nothing. This is because Sensionics was moving very rapidly past $3. The entire chain for calls on Sensionics. Let's see. Oh, this is January. Why are we looking at January? I'm still trying to figure out. This bot. I'm sorry, guys. I do apologize. How embarrassing. I don't know how to use my own analysis tools. Oh, it won't pull the future dates. All right. Well, I guess I don't have anything to show you here on the options. I'm sorry, guys. Feel like I was teasing something and had nothing left to tease. I will go back and I will analyze the options data. I'll probably release it once I have time to figure out the bot and look over everything. I'll issue some DD on it and we can talk a little bit more in detail. about what we saw in the options chain for Sensionics. But what it basically boiled down to was the calls on Sensionics here skyrocketed, and there was a huge amount of delta gain here, and it resulted in theta basically dropping to zero. And then a whole bunch of sell orders came through last night. Sensionics, they just evacuated their position and they switched to puts on the 4th of February. So they took out most of their calls and then just bought a whole bunch of puts for February and March. And they knew that this thing was going to get stuffed. So they probably the ones that had something to do with it, is my best guess. That being said, Sensionics is now in extremely oversold territory. This is what you would call a dead cat bounce, which I don't feel like Sensionics is a dead cat by any means, but this is just a technical reference. It actually creates an inverse head and shoulders here, but you see this. We gap down, free fall for a while. We created a shoulder, a head, and then another shoulder here, which we can zoom in and you can see a little bit clearer. So this is a inverse head and shoulders. Sensionics is most likely going to continue to sell down a little bit until we can break this line here. So I'm going to be looking for consolidation going further on into the next week. Reason being is that this was orchestrated. Okay, I'm just going to say it. All right, you call me tinfoil hat, paranoid, whatever you want, but there's some correlations here. Sensionics is not. There's no reason for the FDA to announce such an amazing thing about their company and then for the stock to just suddenly plummet out of nowhere, especially when they announce such good revenue. Just doesn't make any sense. So the way I'm looking at this is my buying opportunity. So as soon as I get some dry powder, I'm going to go ahead and get what I can together, and I'm going to buy some leaps on Sensionics because I know this company that once it achieves success and it markets its product out to the rest of the United States. Currently, it's already distributing products in the EU. They were just waiting on FDA approval to get their 180-day product issued out to the United States for manufacturing. And as soon as Sensionics starts to achieve its dreams of uh, selling its 180-day continuous glucose monitor out to the United States, there will be bullish news. The next catalyst that we're looking for on Sensionics is for them to issue a summary application or a supplementary application, excuse me, for their 365-day EverSense, which is the next generation of their continuous glucose monitor. I happen to know that they already developed it because they talked about it. They already have all the technology ready to go. The only thing is that they had to wait for the FDA approval on the 180-day products because if there was anything wrong with it, they were going to have to go ahead and make changes so that they could get approval for the 365-day product. They're literally the same chip. It's the same chip. The only difference is that the 180-day product has already been studied out to a full year because they had enough time. Remember, they were overdue to get their news back in December of 2020. They were supposed to get their FDA approval around December 2020 or as late as February of 2021. It didn't happen. But they've had that product and they were doing a test and they announced in their promise study, which was back in June of 2020, 2021, June 2021, they announced their promise study and the results of the promise study showed that this continuous glucose monitor was accurate to within a 90th percentile of glucose test strips. Those are the little strips that they prick their finger and press the blood to the test strip to test their glucose. It was accurate to that test strip, which is a industry standard, to within a greater than a 90th percentile. It's a super small margin of error. The product is almost as accurate as those glucose test strips, and it's able to detect far more activity in the blood and it's able to detect certain molecules. It's able to monitor cholesterol. It's able to monitor platelet count, oxygenation of the blood, things like that. So there's all kinds of good things and all sorts of excellent use cases for their product, but they've also proven that it's viable to be used for more than a year. This gives everybody so many good reasons to switch from using Dexcom's product over to Sensionics. And as soon as people catch on to that and the sales come in for Sensionics product, I promise you there will be a response. There will absolutely be a response. So I'm going to take advantage of this dip and I'm going to buy some leaps on Sensionics while the price is low. I don't currently have any spare cash to make that purchase right now. I'll be letting people know when I go ahead and make that adjustment to my portfolio. But what I'm looking for is for Sensionics to crack above double digits within the next 5 years. I really think that it's going to be way sooner than that because it's not, they're already prepared to go to market with these products. They've just been waiting on FDA approval. So, like, two earnings quarters from now, they're going to get numbers from their new sales figures when they put the 180-day product out to the United States. And like, I have the utmost faith in this company. I think that it is going to truly go to the moon, and it's going to go to the moon in a classic way in which stocks that prove themselves, the companies prove themselves to be valuable to investors. This is one of those plays. It's not the type of play where it's like, oh, this is a huge gamble at the casino. No, I'm betting on this company for 5 years. And in 5 years, I'm expecting to see 500% returns. I expect this company to be well worth my while. So I am investing in it long. As far as I'm concerned, it's my retirement fund. I think that about wraps up my DD on Sensionics. So we'll go ahead and cut the clip here. Kat, you can go ahead and mark the time. All right. Well, we covered all that, so I want to go ahead and move on to the next ticker that we're looking at. I'll go ahead and do another intro clip here. Kat, if you want to mark this timestamp also. Hey everybody, this is True Demon, the Devil Stockbroker, coming to you with a trading signal that we received on Draftkings. So Draftkings, which you probably heard of if you're into sports at all, but Draftkings is a fantasy sports betting company. They provide online gambling services for sports bets, and it's been a traditionally very profitable company. They haven't been doing very well recently in their stock price. There was a lot of shorting and a lot of rumors against them. Most of them unfounded rumors, like about like black market gambling and stuff like that that were circulating in China. It was totally unfounded rumors that got repeated by Hindenburg. So those reports were completely like there was no basis for them. But regardless, the stock sold off. So DraftKings, their stock has not been doing well. Right now, if you look at them on the daily, their RSI was oversold down here. It's been oversold for a long time, since like late November, and it's continuously hit oversold. The MACD is way low, and the OBV is pretty much is pretty much, oh, wow, like negative 358. So this is something to pay attention to. This is a massively oversold stock that has it's consistently profitable. The earnings keep disappointing, but the profits for the company are there. The company isn't actually doing poorly. And for a long time, like their stock was pumping, like all throughout the COVID pandemic, because of people continuously betting on sports. Because what the hell else were we going to do in the pandemic? So now we've got a catalyst. So uh, everybody who's not into sports ball, like myself, I had to educate myself on this because I don't pay attention to sports ball. But football season is coming to a close, and we have the Super Bowl Sunday this weekend. So because of that, there's going to be a ton of sports betting on DKNG. But that's not all. Somebody else is making a huge Super Bowls bet on DKNG in the stock market. Options market is showing a massive amount of bullish flow on DKNG. Go ahead and switch my screen here. So first, I want to let everybody know, give credit where credit is due. Your boy Milt is He's a stock trader that often posts on Twitter. He actually alerted me to this one just by virtue of this tweet here. Pointed out some extremely bullish flow, and these numbers are now old actually because they printed about 2-3 hours ago or so. This really got my attention. So I'll just go ahead and quickly summarize what Milt was talking about. Um, DKNG February 11th calls for $24 strike were trading at an insane amount of volume. Most of this volume came in within just the last couple of days. And the volume on February 18th has been pumping as well. These $28 calls, more than I want to say 5,000 volume was added as the OI pushed up against 2,000, and then uh, calls for $25 had 11,000 volume with a most of it being added to the OI. So this is mostly buying of new written calls. So we can illustrate this on the chart here. If you look, the red bars here on this chart this is $28 calls for February 18th. The red volume bar, this is just volume on it, and then the OI on those calls is the blue bar here. So these were pushing 2,500 open contracts for February 18th. Just a massive amount of volume. The OI increased by nearly 1,000 today, just today. So there's a lot of bullish volume coming into this stock for $28 strike DKNG. By the way, I just want to preface, now that I've said this, I want to remind everybody I'm not a financial advisor and this is not financial advice. I'm just reading out the data as it was presented to me, and I happen to agree with it. I have taken a position in DKNG. I am extremely bullish on the stock. I would, as in my own strategies, I tend to be very conservative in how much time I give myself. I love to give myself more than 30 days to expiration when I take bets like this because it gives you the opportunity to be right and it also gives you time to get out of your position if you're wrong. So it does limit your exposure to volatility. So there's a chance that if it does run, you won't make as much profit as if it were to run next week and you bought calls for next week. But if you're wrong, then and those calls don't, and if that call doesn't work out for you, then those calls would be worthless in just a matter if the price went down just a few dollars. So I like to be conservative. I like to give myself a lot of time. So for that reason, I bet further out. When I bet further out the money, I give myself time. So going a little bit further, this is the flow on visible alerts for DKNG with more than, holy moly. I'm gonna have to find out what kind of filters he used to get this flow. But the volume and the premiums were more than 60% bullish on DKNG based on Milt's filters. I don't know what filters he used, but maybe we can go ahead and figure it out ourselves and see if we can print ourselves a few dollars here. Just going to go log into my unusual whales here in another window where you guys cannot see me typing in my password. One second, we're having a bit of a delay here. Oh, tell you what, I got my flow up here on another window. I'll just go ahead and share share a different one. All right. So let's go take a look at some unusual whale flow. So right off the bat, we're just going to look at all calls for DKNG. Days to expiration, 30 days. We're giving ourselves 30 days. And it's premium above $50,000. We're going to go ahead and take a look at this. $50,000. The volume is 75% bullish. The premiums are 58% bullish. 61% of whales are making their purchases on the ask side, meaning they are paying more to enter their positions. And the premium is 82% on the calls. So overall, calls are what are being purchased. If we look at the premium heat map overall, almost all of the premium is focused on the $20 strike. If we look at the bullish heat map, $20 strike, that makes up for about roughly two-thirds of all the premium. Two-thirds of all the premium on DKNG is targeting the $20 strike price for February 18th. A lot of new calls have been put out here on the $28 strike and the $25 strike. A lot of this is new volume. See if we can go ahead and look at a few others. Let's go look at the $25 strike calls. Look at that. Look at that OI. Holy smokes. So the OI on the 18th of February has been rapidly increasing, and look at the volume that we saw today. Just wow. The ask was at $1.04 at the high point. Almost all of the premium, almost all of the positions that were leveraged here were hitting the ask between, say, from the morning bell till about, what would this be? 11 o'clock? Yeah, it's 11 o'clock. Wait. 9, 10, 11. Yeah, 11 o'clock. So up till 11 o'clock Eastern Standard Time is when most of this premium was pushing. So, I mean, good Lord. 7 days. There's a second piece to this.
It was slightly worse.
Sorry, I apologize, guys. Let me pause. I've got something going on. Apologize for that, everybody. My wife came through the door with a minor emergency, but everything's okay. Just required a little bit of urgency. Anyway, continuing on, DKNG. So focusing on the bullish premium, the $20 strike is obviously what's got most people's attention. Let me go ahead and bring back our trading view charts. Trading tarts. You know what? That actually doesn't sound too bad. So looking at all of this OI, $20 has only been in the money for a short period of time, just to the end of January. This was the dip. All right, like this this was the dip. $20 strike. If anybody caught $20 strike from here till about like $21, they're doing really well right now. I'm expecting. I suspect that whales made that move, catching the bottom, and now we're expecting a massive move to the upside. Uh, Little side note: I notice inverse head and shoulders on the OBV, which is interesting. Um, I don't I don't normally do this, but just because we're trying some new things here, if we look at this as a technical pattern, the inverse head and shoulders, if we would see this on the price, which you can kind of see it on the price, it's a little wonky, but you could read this as a head and shoulders pattern. Um, but looking at the OBV, it's very clear that it's a head and shoulders pattern. And I'm just kind of curious, like, what's going to happen? Like, if we actually crack the neckline on this one, what would that look like? Because if I'm if I'm using a neckline on if I'm using a neckline on this, I'm going to pretend that this is a much more clear head and shoulders than it is. Then it would be right about here. So the price that we'd be looking at would be about $24.50. That could be something. So I'm just throwing out a little bit of wild speculation. I'm not sure if anybody else does this, but DKNG really putting out a lot of strong bull signals that have definitely got my attention. So I went ahead and I opened up a position for February, and I'm going to go ahead and make that. Uh, I'm just going to see what happens next week after Super Bowl. Let's see what else can we cover on. Tell you what, let's go ahead and open up Webull actually, because Webull has an excellent options chain that makes things really easy to see. I wish that TradingView had an options chain that I could look at. It would be really nice of them. All right, let's go ahead and take a look at the stream questions as I'm pulling this up. Thoughts on LabU Biotech ETF as a multi-year hold? Looks like it's bounced off this price point twice before in the past 5 years. LabU. I'll close a few of these. Oh, wow. Quick update on Uber. I just noticed this. We bought into Uber somewhere around. I believe we bought in at February 8th. We saw some unusual whales prints and saw some big bullish volume coming in. And unusual whales popped big time in after hours because of their earnings. So this was a big earnings play. And then as soon as we came out of earnings at the bell, I sold out of those calls because it was a vertical call spread. So I decided to sell it since I was at max profit, and it tanked from there. A Wow, and it has not really recovered. Man, earnings season is just so freaking confusing. It really does baffle me sometimes. I now see a head and shoulders on it, but man, that doesn't make any sense. How a stock can climb 40% in a week, and then as soon as they announce a killer earnings, just sells off and drops below half, giving back all of its gains for that entire week just in a single trading session. I'll never understand. Like, this market just pisses me off so damn much. All right. Go for trades asks, I saw your AMC imminent post. Can I go over that a little bit? Talking about short exempts. Yeah, that is on my agenda. We will talk about that. I'm going to go ahead and take care of this request to look at LabU. So let's look at this on the. Okay. Oh, I see. Yeah, I see what you're talking about. That's funny. So right at the end of the 2016 recession, well, 2014 to 2016, um, wow, what a sell-off. Holy cow. Wow, biotechs did not do well in 2014. That's interesting. Yeah, thanks for calling this out. This is actually pretty significant. Let's look at this. Um, so we broke through it twice here. Interesting. Very interesting. So 1950. And 20. All right. Oh, I see. So this is more like 13, $14. That's quite a bounce. That's actually pretty interesting to me. Thank you for pointing this out. Copyright Cower. Thank you very much. So LabU, this is a biotech bull stock. It's 3 times it's 3 times leveraged, and there's been a major sell off. OBV is way low. So I would actually look for OBV to turn around before going ahead and buying this. But I do see some opportunity here, and I see a inverse head and shoulders starting to develop. There's actually a pretty interesting pattern right here. So if this is a inverse head and shoulders that's developing, then we would see the stock rise to about, we'll say about 43.19. Let's lift that up to $44. So it'll go about, if this were to complete its pattern and create an inverse head and shoulders, we will see the price come up through this resistance and test this resistance here at about $44 and then come back down to retest 33.75 or 33.50 thereabouts. And oof, man, that's quite a that's quite an interesting play. You would be you would be playing the potential for the stock to climb back up to about 65, $67. If you were to take a position here, you could do that. I would probably be doing leaps if I was going to do something like that. And I'm going to go ahead and take a quick break. Kat, do you mind taking over the stream for a little while and covering a couple of our other main plays here for the next 30 minutes? All right, let me know when you got when you've got yours up and running. Again, thank you guys for joining the stream and being a part of all the research. This is ooh, wow, man, you got me really paying very close attention to this lab U play. I can't take my eyes off of it. When we come back, we're going to talk about AMC and some of the short exempts that we were seeing, as well as discuss a little bit the signals that we were talking about that led us to DKNG. But just reiterating what we've seen here, massive bullish options flow on DKNG. We're probably expecting a major move to come soon, just based on the flow, and we're just going to see what happens. Kat, I'll go ahead and turn the stream over to you, and I'll see y'all in just a few minutes when we come back.
All right. Looks like we are back. Quite a morning. Should say. Get everything kind of lined up here. me check live stream questions. Looks like we're pretty much caught up at the moment. Did anyone have any plays they're looking at the moment? Anything to bring to the attention? Anything running? I see that the Spy's been having kind of a rough go of it here.
It's looking to push to the 444.50 trade line. This is a fake. This is a fake pump for them. All the news that's coming out of Ukraine and Russia are bearish, bearish, bearish.
Gotcha. Yeah, I was wondering if it was actually gonna hold this pop. This is a pretty aggressive sell. Was there anything new?
Nothing regarding the Fed. Mainly all this fear regarding Russia and having their troops at the border ready for an attack. Multiple officials are confirming that the U.S. is ready to take action in case it happens.
And was that within like the last over here around 1 o'clock or so, or is it just kind of the lingering setting in?
It's been coming on and off for the past 30 minutes. Like different people,
Okay.
security advisors, and Biden and everybody else speaking about it.
Well, ain't that just lovely? Oh me, oh my.
Did you say something about dip buy?
Yeah, exactly. I'm curious to see if. Oh man. Well, that's going to be interesting going into the Fed meeting, considering we're going to have that stacked with Ukraine here. Lordy. Let's see, how are we looking on the flow right now?
Brian Landry on YouTube says Biden thinks Putin gave the signal to his military. Yes, that is the rumor and spy news from Nzinga.
Oh Lord. Yeah, we're seeing a lot of red in the flow on SPX. People buying VIX calls. Got some green on Amazon. That's about it. Yikes. Yikes. And gap here. 2. Sure those bulls are pissed too that loaded up on all that all that DKNG right before it market took a hit here. Everything's just coming down. Well, it's time to wait for a re-entry, I suppose, or just start buying puts. Well, maybe not start now, but see, I guess what direction we're gonna go from here. Lord.
The volume candles are getting smaller on the SPY on this pullback, but the next hour will determine the direction. Again, if news over the weekend get worse or if Russia does attack, given the Fed meeting on Monday, yeah, it's bearish.
Yeah, I wonder how certain what would end up running. I'm assuming like steel, oil, stuff like that, but
We're talking about this last month, remember? But it was like more like Lockheed Martin, Boeing, you know, it's like that. 'Cause, you know, there's some people who like war.
What are the plays for U.S. Army? I think Raytheon is one of them.
check on that. Let me see. Yeah. I guess before the confirmation of war, RTX has fallen with everything else in the meantime. Oh, Lockheed Martin.
Oh, I was about to say, look
Yeah.
at LMT.
Yep.
That's usually a good sign of amping going up somewhere.
Oh boy, oh boy.
Tony throwing out some of those stickers: Boeing, Raytheon, Douglas, and Halliburton.
Can I not spell today? Jeez. Oh my god, I cannot type. What's going on there? It's all over the place. Douglas. No, what's the ticker for that? Look it up real quick. Man, he's spitting out the ticker.
Yes, he is.
Douglas.
Shout out to Meme Maker. He's an OG as well.
That's Plow. It's going down. Yep, General Dynamics. GD. Yep. General Dynamics and Lockheed Martin seem to be the winners here for
Yeah, for real.
war. Gosh.
MT.
So look at the Finvis 500 map. Energy, that has a correlation to this thing too, right? Energy is the only thing that is green.
Yeah, pretty much. Yeah, aerospace and defense, utilities. Oh, sorry. Aerospace, defense, utilities, and energy. Yeah, indeed. So, what are you thinking on? You just still kind of waiting to see line of set on the rest of the day on Spy here, or you think this might be a little head and shoulders movement, or?
Yeah, so we'd see that we were looking at those the rebound to 44, but it seems like it stopped halfway there. The only problem right now is all the spy puts are getting juiced. So that's the biggest detriment to trying to get a really good position with a good entry. I have a couple bad fills that I already did, which I'm down a little bit right now, but looking into Monday, I'm kind of okay with it, letting it ride. Definitely juiced.
Yeah, that's I was looking at it and I was like, oh, I might grab some puts, and then it just started tumbling. I'm like, oh well, they're probably really expensive now.
Yeah, the puts are getting really, really juiced right now.
UVXY was the play today, I guess. Shot right up, still cranking up to almost 17 now.
I haven't even looked, but I'm sure the VIX got some kind of pump going on in it.
UVXY, VXX. Yup. That volatility cranking. SENS also taking a beating. And nothing was really safe, it looks like I said, except for energy and defense.
Speaking about Eli Lilly, 1129 Benzinga, FDA authorizes Eli Lilly's monoclonal antibody for treatment of COVID, retains activity against Omicron. Just came out.
Oh, nice.
What was the ticker for that?
LLY.
Alright. See if there's any flow going into it.
Me maker OG. The only thing I can say to that, man, is do like that movie Private Ryan, and either the only son or maybe like last son alive.
Okay. Now SPY's looking like it might want to hurt us again. Let's see.
I would really like a move to 445 so I can feel better about adding to all the puts.
So are you pretty much bearish just going into the meeting and during it, or all the way afterwards, you think, or throughout the week?
Yeah, so what we've been talking back and forth is if during Monday's meeting of the Fed they realize or they say that they're going to start the rate increase ASAP, then that's kind of negate the 16's release of the Fed notes. So Monday, Tuesday, we might see that dump.
Yeah, I'm considering because it was such a harsh sell-off today. I wonder if we're gonna have that power hour-ish kind of pop and run, followed by the, you know what I mean, like that last 10 minutes of the day dump. So I'm thinking maybe I'll grab some calls for next week, or I'm sorry, some puts for next week on SPY. But I don't know, it just seems kind of like a gamble right now with everything going on.
Well, it's also a bad position to start a put right now. Everything is so expensive.
Yeah, I was hoping for either a kind of a bounce back to get him further out, or volatility to chill the hell out a little bit, but it doesn't look like that's gonna happen.
YouTube Bugwell says they will pump massive fear of war during the Super Bowl. Uvixi is going to huge. Tony Smith says the current military isn't set up to have an influx of untrained people that don't want to be there.
Yeah, yeah, it's gonna be a rough one if things get really crazy there. Hope not.
I wonder how soon we go to retest that 420.
Yeah, I mean, it's definitely a possibility. Really hoping this would just turn into like almost a W and just continue, but definitely did not.
Which for the past 6 months, if you guys follow on Instagram Dark Rifles, I have a couple of buddies that are sergeants there. They've been training with Ukraine forces, Finland forces, I don't know, not Finland, a couple other European countries for the past 6 to 12 months.
Well, they have a base in Romania. Actually, I think the head secretary of NATO was visiting today with the Romanian president. So they might be prepping those guys.
Now, I wonder, what do you think this might do to the meme play since they're holding this level, despite the huge up and downs that the SPY is doing?
It's a really good question, honestly, because I mean, it seems like we do have moments where small caps kind of move and diverge from the SPY. Oof, but if we just get like a massive crater, like I mean, just like how we're seeing today, with nothing really being safe aside from the necessities of life and war, essentially, it's hard to say whether or not they would be like immune to that same action. That I really don't know, to be honest with you. But then after a rebound, if excitement flushes back in the market again, that, you know what I mean, could prompt, you know what I mean, enough movement to, I guess, put it back on track potentially. But that'd be a lot of connecting the dots, in my opinion.
I like it. I like it. What about you, Mr. Pule? What's your take on it?
I think the pancakes from IHOP are like the best when they're super fresh.
I'm not a big fan of IHOP. Like IHOP's all right, but I just don't understand how they're still around. Like they're there, like they're everywhere, but like I never like who goes there? Who goes to IHOP? You know?
My daughter got French toast, but
Pancakes, waffles.
pancakes or waffles, yeah. I'm gonna have to go with pancakes, man.
Pancakes as well every time.
My bad, Landon. Man. What was the question about, brother?
I'm like Enzo Matrix. I'm purple on IHOP. But the question was, the SPY sell-off leading into the meeting. What do you think it'll affect AMC and GME looking at the levels that they've been holding?
Only thing I can say, I'm looking forward to AMC and Jimmy to run inverse. Just I don't know. The last time this happened, with AMC and GME, they didn't care about the SPY, and if they can do that, carry their own weight while the SPY is trying to take a dump, that'll be a good sign for me that we got a good chance of running up. And foil hat.
We went from bleeding and falling to now just sideways.
Everybody's trying to decide what they're gonna do with their money.
Right.
The algos haven't caught on the last words on news. As soon as it catches some type of anything. Oh, you know what? 20 minutes. In 20 minutes, the Fed is releasing something. I heard that earlier today. So they're releasing something right at 3 Eastern time. So hang on.
Oh no.
Tony, I'm the same way, bro. I'll eat anybody's pancakes, to be honest with you. Homemade, it don't even matter to me. I'm gonna tear them up.
Okay, I guess we do have a lot of IHOP lovers. I apologize if I offended anybody. My mistake.
Well, Me Maker has your back. He's saying, as a former waiter, that after church lunch crowd is the worst.
Oh,
Y'all all
yeah.
wrong.
Oh yeah, that's very true. I used to work in a lot of restaurants, and that Sunday church crowd, man, is rough. Or just Sundays in general, honestly. But
Hey, here's a question. Will rate hikes cause CTV rates to go up?
What's to borrow?
No.
Yeah, I was gonna say that I would assume would be once again just kind of still based on supply and demand of the actual stock itself, not necessarily like interest rates of the Fed. But I'm sure Dave could chime in more on that.
No, I was just thinking about exactly the same thing. I don't see how it's related to Fed interest rates. It's just supply and demand, as you say. Yeah.
Yep. All right.
So,
SPY make a head and shoulders. Is that what you did on the 1 minute? Is that what you're trying to do?
Yeah, still looking a little weak to me. IWM looking a little weak. Crazy to say, the only thing that's actually holding its ground is SENS, maybe because it's at the bottom. But Everything else pretty much bleeding at the moment. If you're a bear, then happy Friday to you, buddy.
Yeah, Landis sits over there snickering. He's like, yeah.
C-Dub's probably way ahead of the game. He's like, that's me.
Come on,
Uh,
Spy.
yeah, we closed most of our positions around about 30, 40 minutes ago. I mean, some of those spy pits were so freaking juicy. It was insane.
I can
The
imagine.
ones for 225 went from 404 all the way to 1275.
I made some money on them, but I didn't play them very well. I'm restricted by my small account, unfortunately, that I'm playing with. So I've now got a margin account as well as a cash account. So obviously
Ah,
that frees me up a little bit, because if I'm playing with options, I can just play with options on the cash account, and obviously they're only 1 day settlement, so it's not too bad. I can't short anything. I can't short anything. I can't sell options.
Oh, nice meme maker. Bought shares of UVXY. I'm sure you're doing well.
But if you've got a small account, certainly, if your broker allows you to have both a cash and a margin account, it gives you a bit of extra flexibility.
Joseph Burns has a good point. He said in the breakfast question, Crackle Barrel is better.
No,
Cracker Barrel.
I can get down with Crack Barrel for sure. I like.
Won't never eat there again.
Oh. All right, got some controversy.
I couldn't do it, man. Their breakfast just, I mean, it's okay, but I hot pancakes.
See, I think that's my thing. Traditionally, if I have pancakes, I'm usually making them at home. So, like, I think that's where my disconnect is, because I never really go out and venture for pancakes most places, you know?
We actually went to Windstar Casino last night. They have an IHOP in there. They're like super fresh. And after you walk around for a little bit, and I guess I was just so hungry too, those pancakes just smack. Yes, I did go to Windstar World Casino.
General Dynamics trading near session high.
Yeah, we took a look at that. Jesus.
Looking on the bright side. Yeah. Well, it's, obviously no one wants for, but it's not what we're here to talk about, really, is it?
Spy. Broke below 441 again. Lordy.
420 maybe next time we come back to this story.
You know, if you really want to go that way.
I'm just saying, jeez, come on.
Is that
I,
is that is that head and shoulders on the spy there?
Yeah, that's what I was thinking earlier. I was hoping it wouldn't be, but
I was looking at 30 seconds. Go out of it. 3 minute. Yeah. Certainly on 3 minute, it looks like. There is. God, if that drops below that, it's not quite.
Jesus. Yeah, I don't know. Below 440, that's a good question. I mean,
It
it's
goes
not
below
looking too good.
440. I'm not sure where the next support is after that.
WM's taking a hit. AMC's taking a hit. DKNG took a hit. Bath and Beyond took a hit. BlackBerry took a hit. So basically, pretty much everyone.
Yeah,
And we
earlier
sit
when
here.
we were getting a little market movement going in the stream, I was like, oh, cool. Like, there'll be stuff to look at. Now it's like, no, there's not.
I mean, we were down at
Stream.
430s in January, weren't we? End of January. Could certainly get down there.
I think it's time for Hello Darkness, my old friend.
Have we got the DJ bot on here? No, I don't think we do on live stream.
You can for inside the Discord. It won't come through on my end, so you can do it inside the Discord if you want to.
Okay. DCMA.
Yeah, we don't try to even mess with that right now.
Tony Smith says spy puts 420 have some interest. Yes, they do. They're already juiced. Actually, when we hit midday today, that's when spy puts just went. That was supposed to be some type of Slurpee sound. It didn't come out.
I think you hit that right on the mark.
Pardon me 1 second, guys. I'm just gonna mute for a sec, but feel free to keep talking if you like.
Oh, there was 69 watching people, and now it went to 67.
Ooh, 2 more pop in there. We got to pop a screenshot. What we
That's
got
the
over
attitude,
here?
Jonathan.
I really want to see AMC.
9 should be our target.
Let's do signing. You can do it, Jonathan. Adam Aaron tweet, check it. Ooh, Hugh, what do we got? Adam Aaron, just to let y'all know, Adiset in here has a picture with Adam Aaron on his Twitter. Check that out. One of the coolest apes around.
He literally is one of the nicest guys in the world. Never seen a CEO be so open with his employees and go say hi to everybody that was working there. He didn't care about the pandemic. He went to say hi to people that were making popcorn, people that were giving the drinks. It was amazing. He's a really nice guy.
He doesn't care about the pandemic.
No, I wouldn't say he doesn't care about the pandemic. I would say he didn't care in that instance because he was so approachable and he was very kind to his employees.
Does he like avocados?
I think he followed all regulated safety measures there.
Yes. All the AMC theaters have this HEPA filtration system based to kill whatever things on there.
Okay, what we got here? Oh, Adam Aaron. January, the officially reported short interest in AMC rose 13.8% from 94.8 million short shares on December 31st to 107.8 million shares on January 31st. I still have an interest in 2.3 million AMC shares, so I hope those short sellers are wrong. What?
Whoa!
No!
Whoa!
No way!
Play it again.
Aaron, you silverback.
Yo, did he just call out shorts?
Yes, he did.
What?
Wow.
Bro. What?
That's wild. He's never done something like that before, like that blatant.
He is pissed.
Where's been Singa Market Watch, Yahoo News with this retweet of this?
Bullish. Bullish.
Yeah, that
Let's
was an
see.
amazing tweet.
Trying to see if there's any news covering it at the moment.
Is straight putting them on blast. Oh, that's awesome. Love that dude.
People on Twitter are obviously digging it, but I'm not seeing any.
The hashtag.
Well, everything that is trending right now is World War III. World War III.
I see the top one being Kylie, followed by HIPAA, Women in Science, Afghanistan, Jake Sullivan, Love is
Okay.
Blind, Down,
In
Black Adam.
entertainment, we got hashtag AMC never leaving and hashtag AMC strong.
I see that McDonald's have been forced to drop the chicken Big Mac just a week after its release.
What a funny headline.
Manchester.
Adam Aaron is Silverback, bro. Agree. He Silverback. I think it's probably because he's like, you know what? That's my money. He's playing with my money now because he owns so many shares too. You know, like he's done with that, bro. That's beautiful.
Which, like, wording it like that, too. I mean, it's one of those things where that's just fact. Like, I mean, like, because he's just like, yeah, I publicly own millions of shares, so you're betting against my retirement fund, essentially. You know what I mean? Like,
Look how much steam it's gaining, bro. Like, wow, beautiful. Not a dead cat.
yeah, I think
4 more minutes.
JJ, I think that's gonna have a lot to do with how the market kind of goes here.
Wow.
JJ says, y'all think we get a rug pull here under 18.
Yeah, that was what I was just responding to. Yeah, just like it kind of depends what this market here is gonna do. I think. I mean, the tweet is definitely good, and it could potentially cause some movement. But I think that the SPY is gonna be leading this parade here.
And to allude to that point, I do think that the fact that we are still at 18 despite the SPY going to 440, it's pretty good for us.
Right, yeah, and to clarify, it's not that I think it's just gonna tumble down to nothing, but of course, if SPY suddenly violently dips down to like 430, I don't think a whole lot's gonna be safe in general. But yeah, no, I agree.
And there's only about 6 million difference between the estimated short interest and the shares on loan.
All right, guys, we got TD. He's back.
Hey guys, how's it going? Did I miss anything good?
And
Adam
we're just
Aaron
talking
tweet.
about that Adam Aaron tweet.
Oh, what did he say?
Here, I'll put it up on stream real quick. It's a good one.
Is it good one?
Be ready for this.
Allowed for you. He's tweeted at 2:45 p.m. in January. The officially reported short interest in AMC rose by 13.8% from 94.8 million short shares on December 31st to 107.8 million shares on January 31st. I still have an interest in 2.3 million AMC shares, so I hope those short sellers are wrong. Only time will tell.
I gotta love a CEO who knows how to push back. That's excellent. All right.
And aside
Well,
from
thanks
that, a little bit of market selling off a bit, trying to catch itself. Had a little break below 440, but shall see.
What a surprise. All right. Well, I've got my stream up. Kat, if you would kindly switch us back over, and I will move us back over here. I see DKNG showing a bit of a bull hammer on the daily chart, and I'm really, really liking this chart setup. So looking at DKNG on the daily, we have established some higher lows here ever since this sell-off. And if you notice, we have a similar pattern in many, many charts that we've done. Oh, excuse me. Go ahead and move that out here. Right there. All right. And then yet another one here. So this is what we call a bull channel. We call it a bull channel because as a stock sells off in this range going downward steadily, they tend to break upwards. So what we look for in a bull channel is for a clean break uh, above above this resistance line, this falling resistance. And when we see that break, we look for it to create a new bullish pattern. In this case, the pattern that we're looking for is a rising double top or rising wedge. The wedge that we see here is actually illustrated. Whoops. Switch these around just a little bit. I'm liking that red. Okay. So if we drop down to this on the hourly chart, smooth this out a little bit, we get ourselves a very nice, clean, rising wedge off of this bull channel. So following the green on the bottom, this is our support, and the red is at the top. This is our resistance. What we're mainly looking for is for DKNG to break above this line. As soon as we see a break of trend in one direction or the other, we have our confirmation. Now, what we're looking for is for us to trade a significant amount of volume in either direction, either above or below. If we see the resistance break out above here and volume is super low, we don't get a lot of trading, then it may come back down. If we break down below and the volume drops out, then we'll probably come back up. But if we break above and then high volume continues, then we're likely to see continuation. So what we're going to do is we're going to watch the OBV very carefully as this trade develops, because the volume tells us just how much is happening on a daily time frame, but OBV gives us a nice trend line that shows us the balance of volume based on what direction people are making their bets. Let's see what else we got here. So DKNG. I'm double checking some of the options flow here on DKNG just to see if we've got any change of direction. The OI on the $20 strikes is massive for this coming Friday. This Friday, we've got, we're actually showing a ton of volume right here at this $23 strike. I'm thinking that we're probably going to see max pain here. Unless DKNG falls by another 50 cents, then we're going to see quite a few calls expire in the money at $23. Let me actually look at both the puts and let me also show this because I'm sure everybody would actually like to know what I'm talking about. Sorry for being selfish about my multi-monitor setup here. Okay. So looking at the options chain here on Webull, we get a very broad tabular view of everything that's going on here. Right now, we're looking at the 11th expiration. Here's the options open interest that we see here on the calls, and then over here is the put side. So puts, lots of puts expiring out the money this week. A lot of calls expiring in the money. Right now, oh, is that a fact? Is that a fact? AMC is moving? That's right. We were going to talk about AMC. All right. Well, anyway, what I'm looking for, DKNG, it may get a little bit of a pump, especially since the market's moving now. If we see DKNG get some steam behind it, we may actually see some of these options roll in the money. If we manage to get a good expiration of options in the money, call options in the money for this Friday, then we might see some continuation going into next week, which would be excellent for our calls, especially given that bullish options flow that we saw for next Friday calls at, just a reminder, $25 strike and $28 strike. Quickly look at those options here on the 18th of February. 25, we've got 260, 200 and, can I even read numbers? Jesus. 26,000 calls open on 25, and then for 28 there's 2,000. About 1,000 of these were open just today, and then we've got at $30 we've got over 25,000 open there as well. So lots of opportunity for this thing to run, especially given the increase in these options value. There's a lot of volatility coming here, so we'll keep an eye on that. Let's go switch back over to AMC and go take a look at what's going on. All right, AMC, AMC, AMC. Let's go, Amy. We'll go check this out on the 30-minute chart. Excellent. All right, so right here, right off the bat, I see that we've got ourselves a bullish pennant formed here. So bull pennant is when we see a significant bullish move in a short time frame. Specifically, we've got a big move to the upside with AMC pushing $21.20. The price comes down and forms a very quick wedge. This is referred to as a bullish pennant. They tend to break up and out. And if you notice on the intraday, this is actually part of a broader bullish signal, which is the cup and handle. The cup and handle, again, very bullish signal. And if you look even further, we have a triple bottom, kind of a quadruple bottom, actually, if you look at it like this. These can sometimes also be mistaken for inverse head and shoulders. They're pretty close to each other. This is more of a triple bottom just because the resistance, or I'm sorry, the support line is at the same line. All the bottoms touch this resistance. Keep saying resistance, support, support, support. So 1, 2, 3, 4 touches of the support line and then a breakout. So this is an extremely bullish signal. If you were to look at this as an inverse head and shoulders, then we've already broken past the neckline and we're looking for continuation in the stock going forward. If we do see that, then we are likely to be facing a position change of anywhere from $22 to $24 just based on the supports and resistances that we see here and here. So I'll go ahead and mark these out really quickly. So I've already got my the next resistance marked out. This is the first resistance here at $22, and we've got another one at 24. So we'll be watching for this. A big breakout above $20 is likely to lead us in onto the next run. I'm super excited for AMC to make its next move. Just a heads up that if you're going to be playing the options market, know that max pain is still around $20. So we may see a bit of a rug pull here. Market makers are going to try very, very hard to make sure as many of those options expire out the money this today here at the closing bell as possible. And then next week, we're likely to see some pretty stiff resistance as well. What we're looking for is a clean break above $20 and $21 to go and touch this resistance. A break above 22, and honestly, I think at that point she's gone. Let's go take a look at AMC on the daily chart and let's review our timeline. So this is more of the DD that we talked about on a timeline of AMC's previous squeezes. If you want to take a look at the video is on Hell's Basement. Kat, if you wouldn't, or if somebody wouldn't mind going ahead and finding a link for that video and dropping it in chat, as well as Kat, if you wouldn't mind dropping that that link to that video in post. This this falling wedge. Excuse me, if I could find my English. This falling wedge that formed on AMC early on in November to December of 2020 was the first timeline. It was just this period of time here leading up from this peak here on the 24th of November up until January 27th, excuse me, where AMC squeezed in the pre-market and went all the way to $20. What we did was we doubled that timeline. That's take these two bars and multiply them by 2, and then we added a single week, and you end up with this timeline, which is actually, I drew this from peak to peak first, and I saw this, and I noticed if you multiply the first timeline by 2, add 1 week, and you get the entire timeline to the day from peak to peak. That's from $20 all the way up to $72. AMC went from 20 all the way back down to $5 and consolidated in this wedge for all of that period of time before it had a huge breakout. It broke out in 2 ways. You can see this wedge here, which was a very clear breakout, but also the OBV broke out on the same day. This is what we were watching. Note this little U here on the OBV. I'll cover that again in a little bit more detail in a second. But when you see this breakout and then consolidation for the next trading week, that was, this begins the final week of the squeeze, May 24th or May 25th, which is the day that I called out AMC is going to squeeze imminently. And it went to $72 by June 3rd. So if we take the second timeline and then we multiply it by 2 and add 2 weeks, that gives us our third timeline. So literally, second timeline right here, copy it, lay it down next to it from end to end, and you end up with today. As a matter of fact, it's today. That is the second timeline, and then plus 2 weeks. 1-2 weeks gives us what I'm speculating is going to be the complete of the third timeline. I'm literally throwing this out here as a massive disclaimer. I can't be clear enough about this. I'm trying to predict the future, and I have no idea what is going to happen. I'm just looking at this chart and seeing a pattern, okay? There's no precedent for this anywhere in the market. I cannot guarantee the accuracy of this, and I'm not claiming it's going to happen with any degree of accuracy. This is a wild, speculative guess at what might happen. There's no way I can ever possibly know this. Please don't trade on this information. Don't treat this as gospel. Treat this as tinfoil stupidity for what it is, okay? This is tinfoil hat stupidity, all right? So you shouldn't trade on this information at all. Please don't. Now, if we want to actually trade on some real technicals, AMC created 3 wedges, okay? There was a falling wedge here, there was a standard wedge here, and then there was a falling wedge here on AMC's chart from June 3rd all the way out till late June here in 2022. That's where the tips meet. So we actually hit a top we met resistance here back at $44 when we thought that AMC was going to complete a cup and handle and then run from there. Turns out we got rug pulled. AMC's been selling off since then until it hit the bottom at about $13.50. This actually created a falling wedge within this broader falling wedge. Okay, so it's a wedge within a wedge. All right, wedgeception. This break down below the wedge actually would have been a bearish signal had it not been for the breakout that occurred just 4 trading days ago. So the breakout, we re-entered this larger wedge, we broke out of the smaller wedge, and now we've established a new technical pattern. And what we can do to further confirm this is we see the volume around AMC. Note the volume down here where there was a channel in the OBV. It's really small. It's kind of hard to see. But you see there was a breakout that occurred right here when AMC was trading at about $3. It broke out from $1.50 to $3, and then the run happened a week later. AMC topped at 20 and then sold off, consolidated all the way up until this point. Okay, so on OBV, we're going to draw another wedge. Okay, you see that? OBV got another wedge. Now, what's interesting, broke down below again, okay? If you look at this channel here on the OBV earlier, that wedge also broke down below. We had a breakdown below the wedge, and then a few days later, broke above it. So, one more. AMC, create a wedge here. And I'm just following the bottoms, right? I'm just following the bottoms. Bottom, 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 and then broke down below it, okay? We created this little U. Now, if this tinfoil hat theory of mine turns out to be accurate, which I'm not saying it is, I'm not saying that. But if it happens, then there's going to need to be a lot of volume coming into the stock. If there's a lot of volume coming into the stock, that volume will have the power to push AMC's price by a significant margin. If AMC's price gets pushed up in a specific direction, like up to past this mark, we can speculate that the price will move somewhat in what would the word be, in correlation with the OBV rising, because OBV is bullish volume. That's the price rising above with the high volume. So if we see a lot of volume come in, AMC may break out above this wedge. If that happens, then in order for the OBV to lift by that much, I would assume that the price will have to lift comparably so, probably by about 5 to 10%. That would put us above $22. So that meets up with our resistances. If we see AMC make a sudden pop up for $20, I'm going to be expecting to see the OBV follow and leave us right about here. Now I'm going to mark out a couple other things that I noticed, okay? AMC, when it broke on the OBV, when it broke above here, it had a top, it relaxed and consolidated. The price does the same thing, okay? You zoom in on this, price pops a little bit and consolidates. And then it runs again. Okay, so consolidation, and then the OBV runs again. Pops up above, consolidates, and then runs again. This one took a full trading week for it to consolidate. Now, if we see this happen again, AMC, pop above, consolidate, and then run again. Okay, that's basically what we're looking for. So if you're looking at drawing this chart yourself, you can follow along. Just go ahead and take a snapshot of this, take a picture, whatever you want to do. But all you're doing is you're just adding the OBV, draw some wedges on AMC's charts from November 24th to January 29th, from January 27th to May 21st, and some wedges from June 2nd all the way down to, well, wherever this ends up. But just follow the bottoms and the tops, okay? It's very simple charting. Just drawn some wedges, all right? And then do the same thing with the OBV. Follow the bottoms and the tops, follow the bottoms and the tops, and then you'll notice there's a big dip each time. These big dips, these are predictable, and I'm betting that we're going to see some reversal. So that's my stupid tinfoil hat theory and my big YOLO gamble on AMC. If I see that OBV pop above, you bet your ass I'm going to be buying some stupid out-the-money calls for about 30-day expiration. But I'm going to be patient. The key here is to be patient. Okay. That was a lot of talking really fast. How we doing? 12:17 p.m. Oh, that's 3:17 New York time. Let's go take a look at what's going on in the live stream chat. Sorry, I was like focused on trying to blurt all of that out as fast as I possibly could. Unfortunately, I'm not going to be able to stay till the closing bell because I have an appointment with a dentist that I can't put off. So I hope you guys will understand. Got to be responsible.
There is a couple questions in the Discord and live stream questions.
Excellent. Let's go ahead and take a look at those live stream questions. Oh yeah, go for trades. I'm sorry. You had asked about the short exempts theory. So I'm gonna pull up some data on AMC and go take a look at those short exempts. Just keep in mind that the short exempts and all of the short volume data only gets published once a day at the end of the day, so about an hour after the closing bell. So we don't have data from today. We only have data from yesterday. But I will go ahead and show some of that here. If you guys in the stream are enjoying this, be sure to give us a thumbs up, give us a like, let us know how we're doing, give us some feedback and your friends. That way we can share the DD, the knowledge, and the research with everybody else that we possibly can. We're not strangers here. We don't keep our trade secrets here. We don't hide the truth from people. So we're all about transparency and disclosure here, just like the market should be. Go switch over to my browser. Okay. You guys should be looking at this AMC data right here. So AMC's chart, courtesy of this data is courtesy of the FINRA short exempts, which you can or FINRA short volume data files. These are free files that you can download and look at for yourself. But what we've done is we've programmatically churned up these numbers and give it some highlights so that we can look at any anomalous activity. There's some things that we actually notice here. So AMC has some pretty significant highs here recently, up at $20 on the January 20th, and we retested that high just recently. And if you happen to notice, there's been a lot of shorts over total volume here. So of the total volume that's been traded in AMC, more than 50% of it every single day since January. That's pretty ridiculous. What we're also noticing is we're seeing that the delta or the rate of change on the 5-day moving average has been steadily climbing into the positive, and just in the last 2 trading days, we saw a significant pop where the 5-day simple moving average popped up above 4.5 and 4.6. The 5-day simple moving average is just taking the average price over the last 5 days, adding them together, then dividing by the number of days. That's these last 5 closing prices, add them together, divide by 5, you get the 5-day simple moving average. What we're looking for these squeezes is essentially we're looking at the short exempt volume to create a big anomalous spike. So we got some spikes here on the 21st, the 24th, the 25th, the 1st of February, and just yesterday. The reason why we look at that is because short exempts are only afforded to market makers. Only market makers get to use these. So what we speculate is that they use it to control the price by exempting themselves, because market makers make their own rules about short exempts, and the SEC only slaps them when they make it so obvious that they're doing something wrong that they themselves would look bad if they didn't smack the market maker for making FINRA and SEC look like they're lazy and sleeping at their desks. So these massive spikes, keep in mind, short exempts, they're supposed to be rare. Most stocks don't have any short exempts, or they have less than 1,000 every single day. Like, it's a rare occurrence. You should not be seeing numbers like this. AMC has done this every single day since January, okay? And even before that. There's, it kind of pisses me off, but we'll get to that. So what we're looking for is, we know that AMC's utilization has risen extremely high, okay? The first trigger that I look for is for utilization for a squeeze to be above 95%. Right now, AMC's utilization is above 100%. So great, we met that criteria. The next one that we're looking for is the short exempt volume divided by the short volume. That's short exempts divided by short volume. Multiply that by 100 and you get the percentage, or the short exempt ratio. What I look for is for the short exempt ratio to climb above 3.0 or 3% for multiple consecutive trading days. We actually got really close here on January 21st, 24th, and 25th, but didn't quite make it. So we didn't react. Okay, we didn't react too strongly to that. And the third trigger that we look for is for the 5-day simple moving average to increase by 5% for 3 consecutive days. So if the delta rate is 5% or greater for 3 consecutive trading days, that's the key here. This is what we look for. We also will note a spike if the 5-day simple moving average delta rate increases by 15% in a single day, but that by definition means that the price has risen so massively that a single day's move has already lifted the delta by more than 15% on this 5-day simple moving average. So the price will already be moving at a screaming rate, and basically it'll be just yelling at you in the face to buy it at that point. And that's kind of like the FOMO. So we're looking for a steady climb. That's what we want. We want the steady climb so that we can get in on the trade early before anything gets a little bit too out of hand. Quick review of AMC's short interest. Meme Maker OG. So I noticed your comment that Matt made. What I think that Matt may not realize is that Mr. Adam Aaron has the ability to exercise those options at any time at his discretion. So he does have options. So he may not have exercised them, but he does own a vested interest in 2.3 million shares. So just a slight correction. It's just like a little bit of wordplay. But Matt is correct. He doesn't own the shares. He owns mostly options, with the option to exercise at his discretion. So he does have. We'll say he has notional shares that have not been issued to him. When he chooses to exercise those, then yes, he would own those shares and he would be purchasing them at the strike price for whatever those are. I don't have that filing in front of me, so I don't know what that strike price would be, but I'm guessing that it would probably be at very reasonable level as compared to what we're buying them here at the market. Sabrina Klein, been in AMC and GME for a year. Yep, me too. It's been a hell of an adventure. I definitely didn't see myself doing YouTube or stock market research by the end of all of this, but I share that sentiment. And congratulations for the 1-year anniversary trading this bullshit. All right. AMC. First, we're going to look at the security lending volume because I really, really want to point out something that has happened multiple times in AMC's history. Security lending volume spikes happen right before the squeezes. There's actually a linear relationship. If you look at the tops and you draw a line through this, just a linear trend line through all of these tops, you'll find that there is a linear relationship between AMC's price and the amount of security lending volume, which tells us that shorts have something to do with it. They have a linear relationship to the price. There is no guarantee there's no way for us to know exactly why, or at least if we can know the way, it probably involves some mathematical formulas that are way too above my pay grade to figure out. After all, I'm just a devil worshipping degenerate who likes to play with stocks and draw crane drawings. But at the same time, like, I have to give respect to this data and take note of this linear relationship. Also noting the failures to deliver, which seem to have an exponential relationship. So as failures to deliver tops grow exponentially, price starts to do some ridiculous things. Actually, I'll bring that back for a minute. So something has happened with the failures to deliver that I have noted. Um, it really does have my attention. The reason why, if you guys remember, right in at the end of June, something happened in the regulations of the DTCC and the NSCC. Look up the regulation filings for DTCC 2021-005, and you will find that the DTCC changed the lending rules and also uh, the marking of shorts. So there was an implementation where shorts could not be lent out more than one time as a way of curbing naked shorting. This was highly demanded by retail. This took place back in April. The NSCC 2021-002 was a supplementary liquidity requirement, adding that during periods of greater volatility, it would require supplemental liquidity requirements for short positions on stocks. So this actually required market makers and brokers to actually own stock or post liquidity, as in cash, for the net for a certain percentile of the total net position. In simple ape speak, it basically means when market makers have lots of shorts, NSCC comes to them and says, "Hey, asshole, put some money down on the table and prove that you can actually cover this if it goes against you." And this was a requirement that was added in June. Suddenly, the FTDs evaporated. They're just gone. I don't think that that means that the naked shorts are gone, though. There's something else going on here. So taking away the failures to deliver in the exchange reported interest, because we honestly don't trust the exchange reported interest. I'm much more interested in the estimated short interest per Ortex, who I find to be extremely on the money and pretty reliable on a daily basis. So if you look at the exchange reported interest, note how close these lines are. Let me take away the days to cover so it doesn't get confusing. Look at how close that is. Look at how close that is. Like that's pretty on the money. I can't fault Ortex for being like a little bit off on a daily basis, because they're estimating this just with the loan data that they get from their data provider, but they're still like it's like that's got to be like within a 90% 90% accuracy. Like that's really close. So kudos to Ortex, who is, by the way, a partner of Hell's Trading Floor. I just want to make mention that Ortex is partnering with Hell's Trading Floor, and they offer us a discount. So if you check the link in the description with Ortex, and you want to sign up for Ortex, all you have to do is just use our affiliate link to sign up for an account with Ortex and start a trial. They have a free trial available for anybody who wants to start with them, so you can get access to this data right away. And then after that, if you decide you want to go in for the long haul, you can either buy a monthly subscription or pay on a yearly basis for a slight discount. And all you have to do is just email support@ortex.com, tell them that True Demon from Hell's Trading Floor sent you, and ask for a special discount from your friends at Hell's Trading Floor, and they'll give you a little cut, so you can get access to this data for a little bit of a better price. cost to borrow is next to nothing, which actually gets my attention. It's starting to rise, though, since the price is going against them. Would be interesting to see what happens. Man, that utilization, though. That utilization. We were down to 72% utilization in mid-January. We're now at 100% overnight. What is going on? What is going on? Let's also take a look at some of these trends here. Utilization down to 84%. Who is hammering me with messages right now? I apologize for anybody who is hearing all the doot doots. Need to turn those off. Put myself in the do not disturb mode or something. Okay, there we go. Sorry about that. So if we look at the massive spikes in utilization, look at how the utilization just drops out of nowhere and then takes off again. And it's interesting that there's like some slight covering that occurs here, and then the utilization rockets through the stratosphere, and then suddenly the price just goes parabolic. And this happened here too back in March, like March 22nd. The utilization dropped out, and then all of a sudden it maxed out, and we stayed at 99% utilization for the next month. And it wasn't until the actual squeeze week, starting on May 24th, that that utilization started to go down. But the short interest, there's only a little bit of covering. The short interest continued to climb ever since then. So I'm wondering what's going to happen here now. If our man, that beeping is getting ridiculous. I thought that I turned that off. Okay, hopefully that solves that problem.
Where is it that you're hearing it at? YouTube. I'm not sure if y'all hear it, but I'm not hearing anything, brother. And I'm not
Oh,
hearing
you're
anything.
not? Okay, so it's just Discord sends it out to me. Man, it must not be going out to YouTube. At least I hope it's not. Huh. Well, I guess thanks, Windows. All right. I am. Oh, is that what that is? Okay. All right. Well, that makes sense. All right. I'm probably going to have to go here in a short while. I actually need to Google map my way to my dentist just to see how long it's going to take me to get there. I got a little bit of time. At least enough time to wrap up the stream here with you guys over the next 10 minutes. If you guys have any questions or anything that I can cover in the last 10 minutes of this stream, and then I'm going to go ahead and let you guys go, you can head over to your other favorite YouTuber for your market close entertainment. But this pretty much covers the remaining trades that we have here. Let's see what else we got here. I'll jump over to our other charts just so that we can look at all the remaining plays that we have. Progenity had a bit of a sell-off today. I'm gonna switch this back over to the 4-hour chart. So Progenity is actually testing that low again, a new lower low. So if we're looking for it to bounce off of this support again, we'd be looking for it to come back down to touch 165, 160, somewhere in that range. This has now become support for us, so this is actually a good confirmation test of that support and also a buying opportunity. So if you're looking to go long in Progenity, those leaps be cheap. I got a good handful of Progenity calls and shares down here when we were trading below $1.50, and I'm really happy with my purchase. Those don't expire until March and April. So I gave myself a lot of time there, and then I got more leaps for January 2023 and 2024 because I'm going long on Progenity for a lifetime. That is my thesis for Progenity. I'm going long for the lifetime. They laundered the shorts through ETF. Fitzy. It's actually it's a compelling argument. It's because when you look at shorts like or the ETFs like XRT, you see so many shorts, like it's 500% SI. Like that doesn't make any sense that an ETF can be shorted more than 500% of its total tradable shares. It makes no sense. BIG will give a quick update on just for the closing bell. Kat, if you want to go ahead and give us set a marker here for yourself so that we can cover the closing comments on our squeeze tickers. So Vinco Ventures, BBIG, retested its low. It's created a inverse head and shoulders pattern, which we're now getting ready to test the neckline. So this one is actually getting ready to make a move, I think. I'll be looking for BBIG to test above, we'll say $3.25. This is the neck. So I'm going to be placing an alert on this crossing above.
Looks like TD has the Ortex screen on rather than TV.
Oh,
From Bert. It's coming
damn
from
it! I'm
Verde.
sorry, guys. I'm sorry about that, guys. I'll go ahead and move us over to. I'll go ahead and move us over to the trading view chart. Sorry about that. Sorry about that.
Appreciate that, Verde.
Yeah, thank you, Verde. Yeah, yeah. Always feel free to come on voice and interrupt me if I'm showing the wrong screen. Always let me know.
No worries, man. I'm just having dinner.
No problem. All right, you go eat your dinner. We're gonna go ahead and go get our tendies frying here. So Vinco Ventures, we're looking for it to break the neckline at $3.25 before we see a run. That lines up with our resistance line here on the Fibonacci that we've got drawn here. The next fib resistance is all the way up at 380. So BBIG, if there's going to be a move coming, we're looking for it to come in the next 60 days. We need to see some volume come in and some confirmation. So right now, we're just being patient. Progenity. Progenity is having a hell of a trading month. It's doing really well since the beginning of January. It's come back up by about 60%. Holy smokes! So Progenity has recaptured a lot of losses that it gave up since the first week of January, and we're looking for it to test this new low here. And if we see a bounce here, then we're probably going to be looking at continuation here up to our $2.25 to $2.30 resistance. GameStop and AMC, we covered this a little bit earlier, so I won't spend too much time on it here, but AMC is starting to go back up to test that resistance that we saw here at $22. If we see a breakout above $22, then we're looking for the OBV to curl up and for volume to come back into the stock. The volume is climbing, so it's going strong. We're really looking forward to seeing AMC break that OBV trend. If it does end up breaking that wedge that you've seen drawn on our other charts, you can go ahead and check out the video on Hell's Basement, and it'll cover that. But we're looking for it to go cracking straight through the ceiling of this falling wedge, this broader falling wedge here at above $30 before the end of March. GameStop doing much of the same thing that AMC is doing. It had a huge sell-off, and the OBV did the same thing that AMC did. Go ahead and draw this. Oh, whoops. Come on, OBV. Here we go. So GameStop's OBV, oh jeez. GameStop's OBV is doing this whole wedge thing as well. So this is something to pay attention to. I'd like everybody to start drawing stuff like this on their own charts and actually seeing what they can take note of from these types of patterns. So if you see these tops 1, 2, 3, these bottoms 1, 2, 3, and then we had a break below, and now we're getting ready to crack through these resistances. So if we see this occur in the OBV, then the price is likely going to reflect it. And you notice that GME is testing its resistance at 125, 130. So if we see a crack above 130, then honestly, I'm looking for it to complete an inverse head and shoulders pattern, do a little bit of consolidation, and then go for the breakout, man. I've got 3 minutes to wrap up any more plays that we've got going on here, so I'm going to go over our big crypto squeeze plays. BTC is moving pretty strongly lately, so there's a few stocks where this is reflecting elsewhere. You notice that BTC had a huge move and then had a brief sell-off here, just kind of relaxing. The RSI is coming off of overbought, so that's a nice healthy pullback. It's not a big pullback. I'm super excited about what Bitcoin is doing. And if Bitcoin continues to run, then it's going to affect these other remaining stocks. So for these, we have BKKT, that's backed holdings, Bit Digital, BTBT, and then Funware, ticker PHUN. So each of these stocks have consistently shown some massive strength recently. Fun is creating a nice big cup on the daily chart, and so is BKKT. Bit Digital is doing much of the same. So looking at all of these on a daily time frame, you see this increasing wedge here, and it's bounced off of these bottoms several times before it made huge moves. So if there is going to be a move, we've got an earnings period coming up for BTBT. There's a lot of bullish flow coming into this stock. It just cracked through my signal line at $5. So when it broke $5, that was my buy signal. So I waited for that. I waited for that pullback. I saw it. I bought more. I've got a bunch of calls for April on BTBT, and that's what I'm looking for. The earnings period is March 3rd, I believe, or March 2nd. March 2nd. So after that earnings, or maybe even on the earnings, who knows? We might see some movement here. But BTBT is already bouncing off of its lows at $3.50. There's not a lot of room for it to fall down, so it's a nice risk to reward setup. BKKT has had some huge volume very recently, and this actually lines up with a big plateau on the OBV chart. And if you actually look at it, there's a plateau here that already formed. So we went well above the previous peak when BKKT was trading at its highest price ever, above $33. Now that the OBV is well above that range, basically, if you look at that AMC chart where I showed you the OBV, where it did that whole like break through the resistance and then consolidate for a little while, that's what this is. It's a big breakout consolidation. I'm expecting BKKT to run again, and this time I think it's going to be massive. I don't know what the time frame is going to look like though, because BKKT, this is the first time that we've seen it make these huge moves. So we don't know if the move is going to be the same, if it's going to be less than, the same as, or greater than this peak that we had back here in November of 2021. We're just kind of speculating right now. It's but there is a lot of bullish volume in this stock. Unusual Whales was printing a few alerts that the other analysts can talk to you about, and yeah, that's about it. Fun is a very similar crypto play. And it just broke through this support, and it's in the consolidation phase right now as well. So we're paying attention to that. You notice this this OBV plateau once again. Got a plateau and it's rising. The OBV is rising while the price is falling. This is an even clearer sign. We got a name for this here at Hell's Trading Floor. We call this hellish divergence. So let's keep an eye on this. And Fun, I'm betting we're going to see bounce off of this support line. I've got calls out to March 18th on this one, so that's where I'm placing my bets. Y'all do what's right for you. Understand your risks and don't take any bigger positions than you are willing to lose. This is not financial advice, and we are not financial advisors. Nothing that we say on this channel can be taken as any kind of investment recommendations. Any decision that you make here while you're on, whether you're watching on YouTube, the Discord, if you're in the community, you must be responsible for your own decisions. So please, please, please take everything that we have discussed here with a grain of salt and understand and respect your risk tolerance. I think that's going to do it for us today. Thank you guys so much for tuning into the stream, and I will see you guys next time.